Alright, in this video, I'm guiding you through the privacy farms or DeFi farming. Okay, so first and foremost, I'm going to head over to the farming tab. And over here, you can see a various selection of different kinds of farms that you can participate in. So just from the top to the bottom, these are some of the ones. These two here are known as native farms, okay? And the rest are non-native. The rest are non-native because they do not contain the site's token in them. For instance, this is the privacy swap, and none of these have privacy in these pairs. So I want you to take notice as well that the PRV, or rather the native pairs, they do not have any deposit fee. Okay, whereas for all of these other ones, there is a deposit fee. Now, before we go any further to discuss about like allocation, and a lot of people have been asking me questions like, how do you split up some investment fund to different farms? How do you decide whether to put more in, let's say, the native ones, or which of the native ones, or some of the other ones which happen to have a high APR? Or, should we go with the USD based ones? Okay, so in this video, we should cover all of that. But before I go any further, I want to discuss a little bit and get us on the same page with regards to what exactly is DeFi and farming in this respect. Okay, so DeFi or DeFi or whatever we want to call it, DEFI, stands for decentralized finance. Okay, so let's go back to the basics of how you obtain your LP tokens that you need to be able to farm with. Okay, so you cannot farm without first having a LP token. A LP token is a liquidity provider token. Okay, so to understand that a little bit better, I'm going to go to this liquidity tab over here. And over here it says add liquidity to receive LP tokens. Now, also, the next thing that we see here is that if you stake your LP tokens in a farm, unstake them here to see them here. Okay, so what this really means is that you are contributing liquidity based on the kind of assets which you have, and therefore, putting them in a place that requires it and receiving a reward. Okay, so to take this a little bit further, I'm going to go to a different tab here and basically go to pancakeswap and finance. Okay, so basically on this spot here, this is like what we have on privacy swap is literally like having a window in a window from pancakeswap. And over here in pancakeswap is one of the top sites right now for DeFi farming. Okay, and we're going to go into the farms and look at what's available. So these ones here is like a directory of what you can actually participate in and earn a certain interest. Notice there's like a calculator button beside each one, and it shows you how much you can make per day. Okay, and in all of these ones, it seems that you'll be paid in the form of a certain kind of token, and in this case, it's going to be cake. So all these farms on this site will be farming for cake token. Okay, and there are some of them that have a higher reward, and you wonder why that is. Okay, the reason for that is because perhaps there is a necessity for a certain kind of token versus the others having less of a necessity. Notice that this one requires the one token as part of it. Okay, and notice that the liquidity here is rather small compared to the other one. So when I first started out doing farming inside of privacy swap farms, I wish to point out that I did not originally start with the native farms. I initially was farming in BNBF because at a point of time it had the highest reward. At that point of time when I first began, the reward was so high. It was about 10,000% APR. And it was a very handsome amount of daily profit. But right now, these two are some of the best rewarding ones. And to give you also another tip, like, do we need to swap our funds into another one that gives a good yield? So there are a couple of issues that you want to think about when you're doing farming. And basically, it's that, first of all, where are your priorities in investing? Are you prioritizing towards, growing your overall equity? And in doing so, how much risk are you willing to take? Okay, so in the example over here, these ones that have a low liquidity, that means, like as you can see, this one here has they need fine, they need more of fine. And if you can provide that, we can have a higher reward. This one needs OIN. If we can provide that, we can get a higher reward, and so on and so forth. Okay, we go down the list, and there'll probably be ones that comprise of some kind of a token that they will pay high because the liquidity is low. And it's a universal rule. Low liquidity, high reward. So if we compare some of these ones here, okay, native ones obviously have a high liquidity, but this, you see, in comparison, is a much lower liquidity, and they could do with more, okay? And in this particular case, Sushi is also the name of another swapping site, and they are also a fairly good one. So, this is actually one of the not bad ones in my opinion. This one has also very good upside potential in my opinion. And now let's coming back to the topic of allocation. If you want to make the most gains, the native farms will usually get you the most gains. Besides, there is no deposit fee. So what this means is that from the day that you start, you already start making gains. Now, if we go to these other ones that are the non-native farms, yes, they have a higher percentage. But by clicking on this, we can see, okay, on the first day is 2.77%, which means that I need to do a farming for more than 24 hours in order to break even. And only from the second day, I start making profit. All right, this is one of the things to think about, but it's not a huge issue. But more importantly, let's think about, like, would you invest in coins just to get a return? Because then it depends in how stable that coin really is in the long term. Okay, is it a good coin? Is it a rubbish coin? Is it something that could put you at greater risk? Okay, so for that, and some people, they'd be looking at the native coins, they'd be thinking that, okay, it launched at X amount of cents, and now it's already gone up like 100-fold, 1,000-fold. Is it still worth it to go in? Well, if that is your concern, okay, what some of the people that I have I've connected with, they're also investing in this particular project, the privacy swap project. The way they allocate their funds is like 20% into the native, okay, and they put 80% into non-native, such as the USD ones. Now, what is good about such an arrangement is that the USD pair will forever be 1 and 1. So whatever you make is a pure profit, and there's zero chance of your underlying capital being depreciated. But on the flip side, what's bad about that is that while your underlying capital will not depreciate, because it's basically tied to the US dollar, you will not gain either. Okay, so let's look at a different model. Okay, I had someone ask me, what if we put fund into, let's say if we already invested in, let's say this, and let's say over here, and you want to put in some additional funds, would BNB Ethereum be a good pair to put money into? Well, the answer is yes. And why do I say that? Because if I were to go in the trading view, okay, and I'm going to show you the chart for, say, BNB, and I'll just do BNB USDT to be able to track that pricing, okay, and over here in a moment, we're going to see the chart. I'm going to switch this to a different time frame of chart, and I'm just going to change it to, let's say, in the last 5 days. All right. We notice that in the last couple of days, the price has come down a lot. It's rated for much better than this. Why? Because notice that pancakeswap and all these DeFi farming projects, they all use the Binance Smart Chain. And if that is the case, wouldn't you think there's a lot of potential in the Binance coin in the upcoming? And this only really fell because in the last couple of days, Elon Musk had been doing tweets to say that, oh, I changed my mind. I'm not going to be accepting Bitcoin for my Tesla cars. And that resulted in a huge correction in the market. And that, with the value in store, I think it's a very, very good prospect to buy into Binance right now. And let's say we're going to have a look at another one. How about Ethereum USD? Okay, I'm going to have a look at the Ethereum USD right now. And the chart that you're going to see is going to be somewhat similar. Okay. We're going to go into the 1 month, and we're going to see that it's been making many good gains. And it pretty much stopped for a little rest over here. And it's just about getting ready for another movement. There's a lot of potential in Ethereum. Why? Because even before the Binance network existed, okay, Ethereum was the network on which many products were being built. So therefore, a pair such as this, as of right now, is a really, really good prospect. So this is just one example of how, you do a little bit of a risk analysis and see, if both prices are at a high, then maybe that will not be so good to do. But if both prices are at a support level, as in now, this makes it a very good prospect. Now let's go into another scenario. Some people ask me, between PRV BUSD and PRV BNB, which is the better one to do? Well, it's relative. Again, let's say if you are in the native pairs because you want to get an above average return for your PRV, then yes, okay, the PRV pairs for the farm is best. And the other good thing about the native farms is that it helps you to retain as much PRV as possible. And in case you didn't know, you can actually do, on this site, vfat.tools/bsc/privacy, and that can actually, help you assess how much you'll be gaining per day and how much of underlying PRV do you have left in that farm. So I can see that in the farm I have 111, and inside the pools I have 162. Okay, so what this means is that, when I do it in the farm, like let's say if PRV was going to rise a lot, I do not lose out on the opportunity of later having to buy back into this only to find out that PRV is now a lot more expensive. So if I'm speculating on PRV, which I am, I will want to put a reasonable amount in PRV BNB, also because I was in fairly early. Okay, so that also affects my decision. Someone who is in later than they may want to proportion very differently, like what I explained to you. For example, just now, I explained to you, like someone else I know is like doing 20% in native and 80% in non-native. Now, let's talk about within the native farms. At what point is BUSD a better prospect than BNB? Well, let's say if you're looking at the charts, earlier I was running you through the charts for both the BNB USD chart and as well as the Ethereum chart. But now let's talk about the BNB chart. Okay, now in this chart, I want you to take notice that over here, okay, if anyone feel that, okay, I saw Elon Musk make a tweet, I know for a fact that BNB might get affected when all these other ones are going down, when Bitcoin is going down, when ADA is going down, when Ethereum is going down. Okay, the next logical thing is BNB will go down as well because the overall market sentiment is bearish. If that is the case, a very good strategy that you might want to do is that you may want to get out of that farm for the PRV BNB and switch to a PRV BUSD. And once the market has actually found a support level and about to regain itself, then you can switch back from PRV BUSD back to PRV BNB, and this enables you to enjoy the possible capital gain in the underlying asset as well. All right, I hope this helps to clarify a bunch of issues. And at the same time, on the flip side, all right, like a good friend of mine gave me a very nice piece of advice. When I was new to farming, just, like the last 10, 14 days ago, I was totally new to this. And I asked him, what should I go for? So he says, when you're farming, just don't do it for the sake of the returns. Don't stock junk coins that you would otherwise have no reason to buy outside of this activity. So that makes a very good point, because sometimes, if you buy like some coin that is unheard of, you don't even know what the heck is that, and just for the sake of farming for a nice return, what if the underlying goes down in its value significantly, and it just goes against the whole point? So you're making a nice interest, but you're losing big time on the underlying capital. That's no point. All right. Now, for those of you who are wanting to go into cake, okay, any of the cake farming pairs, I think now is also a good time. When I recently got back involved into doing a little bit of crypto trading and investment, cake was one of the high performers, because at that point of time, when I saw what's happening in all these farming and DeFi, I invested in cake when I was 25, and within a week it was 41. And right now it's back at 20 something. I think this is also a very good prospect. Okay, this is a good prospect. This is a good prospect. Why? Because both of these are involved in DeFi farming space, which is, I think is a very new and booming concept. Okay, and I hope this video clears up all these, things that may be going on in your head with regards to, like, how do I allocate my portfolio? So if you have any further questions about the things that have been discussed, or just like to be pointed in the right direction, feel free to comment down below this video and I'll get back to you. Thanks for watching. Bye for now.